UTI Mutual Fund and CNBC TV18's Financial Advisor Awards are one of India's most prominent award ceremonies that celebrate the efforts of financial advisors across the country. Over the years, these awards have created quite a buzz in the financial market space, emerging as a one-of-a-kind platform that recognizes the best wealth preservers across different sectors of the country.
What you see here is the best of the best, the most brilliant set of people who have won national and regional awards in individual and corporate categories in the field of financial sector advice or financial advice. For the moment, it's not just a time for looking ahead, but also to celebrate the present, the 37,000 participants that have yielded winners. That makes you definitely the best of the best.
We are in very good hands and in a very privileged place, actually, at this point in India. And that's without even relying on what we all know are the fundamental underlying foundational drivers of prosperity in this country, which is, of course, our demographics, where we are in terms of our evolution as a country, the tremendous resources and talent that we have, and the fact that the world at this point in many ways I think is going to need India perhaps more than we even realize at this point as a market, as a source of skills. I think the trends that you're witnessing in India around consumer protection, regulation, are universal trends. And as you may have heard me say before, they are frankly just trends that need to be embraced. But overall, this is indeed a very optimistic time. I really do think that we have a very fair wind behind us as an advisor community, and we have a very fair wind behind us as a country. And we should really be embracing the shifts that we are seeing at this point.
We receive feedback from participants year after year that they are very happy to put these awards, a mention of these awards in their resume, in their CVs, when they talk to various clients, and they're able to win clients because they won awards. Their clients are happy to bank on such advisors, on such award-winning advisors. Now, that's something which means a lot to us. Money is the best deodorant, said Elizabeth Taylor, but importantly, the art lies not in making money, but in keeping it. And to keep it well, you need to invest time as investors. You need to invest time to find out who are the good advisors, who are the best people to go with in terms of where you should put your money in, because today's world, there are plethora of options which are available. So please do your homework. It is important for the investors to evaluate at least on a continual basis whether your advisor is doing a good job for you or not. Question them as much as you can. A prudent question is one half wisdom, said Francis Bacon.
Having received over 35,000 applications, the Financial Advisor Awards have grown exponentially with each passing year, thus maintaining its stance in the Limca Book of Records.
I think the Financial Advisors Award is a very aspirational thing for someone to have. At a time when, the entire industry is looking forward to moving from merely selling products to being, customer friendly and client focused, I think these awards are a very nice thing to do.
I think it's an extremely important award. I think just a platform to bring all the financial advisors together to discuss and acknowledge their contribution to the sector is, I think, an extremely important thing to do for the industry as a whole.
From whatever I hear from financial advisors, they have high regard for this award. They feel that it's very prestigious. It's because it's not just based on some quantitative parameters as to how big their business is, what's the AUM size, but it also considers a lot of qualitative inputs around saying that how do they interact with their customers, what's their relationship model, what's their support structure, and so on. So from a holistic point of view, at least the jury tries to assess these parameters and come up with worthy winners.
Coming up, we follow the journey of the financial advisor forums across different cities and catch up with juries through the past years as they deliberate on the winners. Covering the length and breadth of the country, the Financial Advisor Awards feature a jury panel comprising of industry stalwarts who grill the nominees.
What kind of advisory model, what kind of support you have. Others, I think, are visible in the slide.
These stringent methods have paved the way to finding and honoring the best of the best in the lot.
These awards, which were instituted a couple of years back, and we have seen quite a few editions over these years, have evolved extremely well. If we look at the number of people who apply each year and also the manner in which the winners display it, it very clearly demonstrates that these awards are really looked up to.
The participants, the contestants, most of them have done exceedingly well, and they have demonstrated their willingness, ability and commitment to upgrade their skills, adoption of technology and disclosures, and serving their clients more efficiently.
Awareness is about their own personal finance. How can you as an advisor help them reach their aspiration?
I do believe that from an asset allocation perspective, it's important that you sell all the asset classes.
The Financial Advisor Awards conduct forums in different cities of India to discuss and deliberate on the growing importance of financial advisors in varying sectors.
Goodwill built around that advice, and that, trust me, is priceless.
Your advice, being a manufacturer in this case, as to how IFAs out there should maybe talk to people to tell them that don't worry, there's an up, there's a down, there'll be an up again. Stay invested for the long term.
It is one of the oldest truths that exists in the investing business, that whatever happens, you must stay invested through the cycle. And it is very well backed in terms of empirical evidence, not just in India, but in virtually every country that you look at. Staying invested through the cycle is the only way that you can be certain of actually getting the kind of returns that an equity market would typically return. Part of the role of a financial advisor is to act as an emotional counselor as well as a technical advisor, to keep fear and greed within boundaries and to counter that natural human psychology as much as possible. If they're good advisors, they'll at least modulate that, and their clients will do that much better.
Yeah, if you look at it, from a Bhubaneswar perspective, in fact, I would even generalize from many second-tier towns, that we visit. What I find is a direct correlation between fixed income assets and the size of the assets of the industry. So in markets where fixed income sales have been substantial, so if you look at a Mumbai, because of a large corporate presence, a Delhi, a Calcutta, Chennai, and I contrast it with, let's say, a Bhubaneswar, what I find is the fixed income assets as a proportion of assets, overall assets, are pretty low. So clearly it shows that the advisors in this particular city are leveraging the equity side of mutual funds, but they are not really, trying to sell enough of fixed income to their customers. And I do believe that from an asset allocation perspective, it's important that you sell all the asset classes.
When you see interest rates going down, fixed deposits are likely to give you that much lower returns going forward. However, if you are in debt funds, because they capture the interest rates decline through appreciation in bond prices and thereby their appreciation in NAV. So that uptick is missed out by fixed deposit mobilizers. It's easier to sell fixed deposits. So, but then is it beating the inflation? For example, they are sold for capital preservation purposes. Now, if you are not able to beat inflation, but more so tax adjusted, then in that case you are actually reducing the power of your money, purchasing power of your money.
A fixed deposit is a little less attractive for someone who's in the top bracket of tax paying, so they have to pay over 30%. So do you think maybe is that another reason why people here might not be so fond of debt mutual funds and would just say let's just put it in fixed deposits?
I find it that advisors necessarily are not approaching their clients to invest in debt funds. A debt fund has many advantages over fixed deposit, over and above the returns that a fixed deposit provides or a debt fund provides. Because, for example, if you really see the last 12 months, fixed deposit might have given you 9% or 10%, but simply because of a debt fund upside, because of the interest rates going up, investors are getting 15%, 18%, 20% also. So, while it offers convenience as well as flexibility, the returns also can be increased in a debt fund.
1.86% of India's assets under management come from Hyderabad. Looking at Chennai, that's 4.98. Looking at Bangalore, that's 5.87%. Now, these are drastically different numbers. And Hyderabad has that capacity. What can be done here in Hyderabad to get this 1.86 up to maybe at least up to Bangalore 5.87 or maybe even top that?
Critically, I'll pick the point from where Suraj earlier mentioned. I think that was his first quote. He said, we love the word guarantee. In a way, the challenge which I think traditionally, cities like Hyderabad face are where they are in love with that guaranteed return. So I think that's their first challenge. They have to break the jinx and say, look, while that is there is a great way to say there's a guaranteed return here, the risks inherent are not shown as much. But here we talk about risks first, and that's important.
People are very excited about two things, real estate and gold. But gold is a beautiful opportunity to do it electronically also. Do you see that as a behavioral change that needs to be brought in to people so that they can start moving things to the electronic path?
Essentially, when it comes to gold, my sense is that, women like jewelry. So the liking for physical gold is not going to go down, just because an ETF is available. Because to explain to somebody that gold is a great way to be bought through an ETF and it's a hedge on gold prices. But eventually the question comes is, will I get gold at the end of it? The answer is no. You have to take the money and go and buy gold yourself. So I think that's one of the reasons why I think the liking for gold continues as it is.
On the other side, stay tuned for a glimpse of the awards and how they have evolved over the years.
Number of customers active for 94,000.
We charge any fee for, so we don't charge any upfront fee, any advisory fees for
The Financial Advisor Awards have witnessed a significant rise in applications. From 26,000 in 2014 to 35,000 in 2015, the numbers will keep on increasing. Our knowledge partners ICRA follow a scope of analysis that covers both qualitative and quantitative parameters.
The broader framework remains the same. Some parameters have been tweaked here and there. For example, last few years there is a greater thrust on what kind of SIP initiative they have taken. We were also trying to see last 2-3 years if they are able to command a certain premium for the quality of advice. Are they able to get some fee for the advisory alone, which is a big challenge. So these are the things which I would say in terms of quantitative parameters were different. From a qualitative point of view, what we were trying to figure out over the last 2-3 years, because the industry has gone through a lot of turmoil, the economy has gone through a lot of turmoil. So given the two, how they are trying to convince the investors to save and what kind of advice they are giving to ensure that they're able to manage the volatility, see through the volatility. So those are the things which have been evolving along with the times.
Broadly, the manner in which one is looking to really judge these participants and what one is looking for has always been the quality of advice and how much value addition, especially which these participants are doing to their clients. But I think one important criterion which one has been looking to give a little bit of more importance over the years has been the investor education initiatives. How conscious are these participants of the possibility of a mis-selling? How much are they really into it for their clients and not for themselves? So what we are really looking for are firms who put their clients before themselves and who try to manage this conflict or try to manage the inherent difference between the two. So I think that's something which increasingly we've been giving more weightage to over the years.
Here I found that the process was very, very scientific, and it was like virtually going through a college or a school degree exam in some sense, in terms of the efficiency of the thoroughness with which one had to actually evaluate all of that, and also the different kind of attributes. Some of them were quantitative, but most of them was also qualitative. So you have to actually look at the kind of presentation, what the ethos beyond it is, look at the objectives, look at how they are delivering. So you have to actually look at so many parameters. So this actually made it very, very interesting for me. And it was not something which I actually had expected at the start of the day. But probably I'm going wiser by the end of the day.
Two areas were new. One was in relation focus of the advisors to the family office, which is something starkly different than earlier years, which is emerging as a major area. The second, which we are looking at, is as extensive use of the quantitative techniques.
I think both of them I thought were really good. It's a tough one. These two are not comparable. One guy is completely emerging. You know, he's just got 500 crores and 400 families. This guy has got actually 500 families, but he has
AUM is 4,500, and this guy is just small guy.
But the only thing is,
small in the sense, not small in a comparison.
Jury was very good, and they asked the right question, because sometimes the depth of business is so deep and you are not able to present the things specifically on the presentation, because presentation is very small, 20 minutes. How can you just so they asked very fine question, which I was also very pleasantly surprised. They asked the question where I also wanted to give detail, and they asked those questions. The jury was very good, and presentation was very well, and they asked the right question. That is more important to get contented with the presentation.
The jury was great. It was a very interactive presentation, so it wasn't like that we were just presenting and they were listening. So, and there wasn't like that you present first and then you have the Q&A round. So question and answers were interspersed during the presentation. So I think it went off very well, and we are hopeful of winning again this year.
I think both rank almost the same.
Particularly the second.
Actually, first and second both almost the same.
Yeah. So we give out of 15, we give about 40%.
I believe there was some 37,000 or 35,000 nominations this year, which were evaluated using a set of quantitative and qualitative criteria, and across each of the categories about 2 or 3 of the nominated players were selected to come in for the presentation. The presentation and the jury process was also very well structured. I think for each category there were a defined set of parameters with the weightages, and we did go down each of those parameters, score the candidates across each of those parameters, and therefore came up with a consolidated score, which was then used to sort of obviously rank the players.
With the new year in tow, the Financial Advisor Awards will play a bigger role, keeping in mind a new theme. That is, a financial advisor's knack of harnessing information through the best use of technology and their ability to be in sync with their customers' needs. That being said, the Financial Advisor Awards will seek more participation, and above all, it will triumphantly bring to light some of India's pioneering changemakers playing the financial advisory role.
Focus, ideate, innovate, enable.